Hello and welcome to Let's Invest Right. Guys, if you haven't subscribed yet, please subscribe to our channel and press the bell icon. Today we are here to discuss about a very interesting topic, which has a lot of return, but it is associated with a lot of risks. Yes, we are here to talk about penny stocks. So with me is Essen. How are you, Essen?
I'm good, Farooq. How are you?
I'm great. Essen, today we are here to discuss about something which is a topic which everyone wants to listen about, especially if they're new in the stock market, and especially people who doesn't have a lot of money to invest, but they want to make a lot of return, who cannot afford to buy stocks at stocks normally trading at very high prices, and yet they want to have the returns. So first of all, tell us something about what are penny stocks.
Well, Farooq, penny stocks are stocks that are like assumed to be traded at below five or at $5 max. These are low value stocks. And you think like if the dollar is, say, if the stock is $1, if you invest and it becomes $2, you'll have 100% return on the investments. But it's not as easy as this. It's very risky. These stocks, it's not for beginners, not for everyone. You have to be very agile. You have to be very active. And being active is not one of the traits to be successful in stock market. So you have to be patient if you're investing. That's one of the keys. But for penny stocks, it's the all other way around. You have to be active. You have to be agile. You're not investing in the long term. Many people have been asking like shares, penny stocks, but why? Because if you're getting returns, but that are not for the long term, that are not risky. The main problem with penny stocks is that you could double your investment, could triple your investment, but at the same time, you could lose all of your money. These companies may not be as they position themselves. These are like at times promoted by many stock promoters. Many YouTubers are being paid for making videos on these. On social media, you see Twitter and other platforms that are discussing stocks. Many are talking about XYZ stocks and saying if the stock is even at $1, they'll say this will next month reach $10. You'll have this much of returns. This will reach $5. You could double your investments. How? What is the
There is,
base?
Essen, there is a concept of, especially which is used in penny stock trading, pump and dump, like pumping and then dumping. So what you are discussing right now, it is somehow we are talking about the same thing, that these stocks are being pumped through different medium, like in Twitter or through different mediums, and in YouTube, through YouTube videos, and people are promoting, and they are actually being paid to promote those stocks. And often they are, of course, also in disclaimers you can find that we've been paid for this stock. But since as the hype is created, and as the price then goes up, which is the ultimate target of those companies, and then we can see sudden dumping of those stocks takes place, and eventually a small trader who actually entered into that position quite lately, when the all hype was at its peak, and then they actually start losing their money, and it's very difficult to come back as compared to normal traditional companies which are trading in Nasdaq or NYSE, and
That's
yeah.
That's right, Farooq. These are traded at the OTC, over the counter. And for the information, you'll not find too much of information on these penny stocks. Like you may see the press releases and the website showing a big luxury company with so much of this, with so much of vision to like change the world in 2030, in the next 10 years or so. But it's not the right way. You have to do your due diligence. You have to know. Well, for me, if I don't know the product, if I don't understand the product or services of a company, I'll not be interested in investing in it. If I'm not satisfied, how can I be the owner of the company, right? So for penny stocks, you'll not find many informations, and whatever information you'll find, it's mostly the press releases, is the social media, people, those who are promoting on the blogs. That's not the right way. That's not the authentic information, right?
But I think one of the way, if anyhow, if anyone is interested in investing in penny stocks, there are a couple of things which we would like our viewers to know. That of course, press releases could be somehow they might be using some kind of words which creates some attractive positions and all. However, there is SEC filings which are more accurate because no one can lie in those SEC filings. So it's very important if you are investing a considerable amount of your portfolio, if you are dedicating it to it. So it's very important for our investors to understand that you should go in details of those SEC filings if they are like if you can find them through different platforms. And SN, there is also a risk of liquidity, because if the stocks are not penny and they're traded in well-known stock exchanges like Nasdaq or NYSE or any other stock exchanges throughout the world, but in over the counter, you don't know whether when you want to sell those stocks, whether someone is there to buy them or not. Is that
Yeah,
correct?
that's right. That's right. So for penny stocks, as you have mentioned correctly, one more important point for us or even anyone looking to invest in penny stocks, like who's willing to take the risk, I'll suggest only those who are willing to take the risk of their investments and they are ready to, even if their investment becomes zero, only those should be applying or investing in such penny stocks. It's important. What the point I was mentioning is to look at the volumes as well. Volume will define how
Yeah.
much people are investing, and that's could be because of pumping, as you said, or the promotion. But if you look at it holistically, or in the background, who's the gainer? Who's the gainer? These are small companies, right? Small companies, small owners who are putting their budget in promoting their company, promoting the name for their shares, right? So the promoters are pumping this, and if the value of, say, let's assume 50 cents, and it's going to $5 or $4, let's assume, who's the owner? Who's the winner? The winner is the owner of the company who's having he may sell all of its share, right? So who's
Correct.
the winner at the end of the day?
Correct.
That's why these are being promoted and paid for it.
And SN, if I would like to summarize, and you may correct me if I'm wrong or if I miss anything. So it's very important for us to understand that these penny stocks are highly lucrative at times, yet they are very risky to trade. And no, there's no doubt that you can double or triple or multiple times you can make your
Exactly.
equity. However, the risk associated with this kind of investment is huge, and you can, of course, it can completely wipe out your investment, but in particular that penny stock. Secondly, it's very important to understand that the liquidity is the issue in these kind of stocks. Third, the tenure of investment. That how it's not kind of a long-term investment. If we may compare it with the blue chip companies where we can invest and we can wait for a couple of years. You need to keep an eye on the stock prices. You need to understand if the hype is there at any point of time, it can really go on the other direction and you may lose all of your positions, or it may become like a scrap for you and you may not be able
Correct.
to get benefit.
Yes, Farooq, you have summarized it. Two more points I would like to discuss here as well. One
Sure.
is to like penny stocks could be trading at 1 cent, 10 cents, half a cent. So one of the things, if you look at the trend historically, invest in penny stocks that are like have some value, not being sold at very few cents. This will have like people are investing, and if you look at the historical price, somewhat data you will find it at least in penny stocks that are worth at least $1 or $2, minimum $2, something like this. You'll have you'll understand the product, you'll have some kind of information at least. That's one of the points. The other point is to have a profit margin expected. If you're thinking the price could go at from 1 to 2 or 2 to 4 or 2 to 3, whatever, 50%, 100%, whatever risk you're willing to take, and don't be greedy. Sell it off. If you assume the price would be 3, if you have a margin of 3, sell it off at 3.
That's correct.
That's the way. Yeah.
So ultimately, you're just talking about the same thing which we have discussed in our previous video. The mistakes normally a trader makes, where one of the points which we have discussed in our previous videos, that it's very important to have the target
Exactly.
valuation
If you
where
don't
you
have
want
a
to achieve.
trading plan, yeah, if you don't have a trading plan, if you're investing in a company and you don't know where it will go and what is the profit that you expect, Even if you don't achieve in those, if you achieve the price that you wanted, just close the trade, for especially for penny stocks. Like if they are up 50% one day, they could be down 70% next day. So you have to have it, in your mind what you want to do.
So it's very important, guys, for us to understand. Since we all are learners, it's very important for us that when we are investing, we should have our targets. What are the correct entry points, and what are exactly the exit points from those investment, where it may it be. And if we don't have them, you may be having a profit for a few days, and it may go on the other direction, and then you may be only wishing it to come back and then closing it, but that time may not come ever. So it's very important for all of us to understand. So SN, is there anything else you would like to discuss, if
One
we may
last
have
point.
missed? Yeah.
Yeah, one last point before we end up our discussion is to be ready for the losses. If you're investing in penny stocks, be ready for it. The investment could go to zero. So if it's up one day, it could go down a lot more the next day. So that's it that I want to say.
And as in my
Higher the
last
risk, higher the
question,
investment.
my last question, when we are selecting a penny stock to trade, maybe for a few days as a day trader and to make quick gains, as you have mentioned, a point which was volumes, which of course is very important in terms of selection of the stock which has enough liquidity, may it be because of the hype or because of the pumping of that stock, and there is a possibility that it's a good company to invest. And what I want to discuss, or I want to ask you, is there anything else than volumes while selecting? Is it like any industry we are talking about, or what other things we can actually look into it before selection of a penny stock?
See, the first thing is to go look at the website, what the product the company is offering, right? If you understand the product, then you can even have it for a long term, right? If you're thinking if a company XYZ is working on a vaccine or a medicine that could cure a disease that has been there in the world, like, and no one is not able to find it, could be a one option. But there are many penny stocks, like they still keep on saying they are in the design stage or they are in the development stage, but
Prototype
nothing has come up.
phase. Yeah, that's correct. So
Yeah, that's
it's very good to exit at the right time, when you have
exactly,
made
exactly.
that target
If you have
completed,
your profit,
or you've reached
close
your
the trade.
target. Yeah,
Yeah,
correct.
done and dusted, and say thank you for that company, and that's it. For
And exit at the
you
right
don't love
time.
it. Yeah.
So, Asan, thank you very much for being with us, and this discussion on penny stocks. Of course, it's a very important for us, especially for beginners. And again, due diligence is the most important part of your investment, may it be in penny stocks or stocks which are listed, and they are like in a billion-dollar company. So your research is really important. And again, it's not a casino, it's not gambling. It's very important for you to understand where are you investing, what is the tenure of your investments, and what are your target goals. And yeah, that's all. So again, I would like to say, if you haven't subscribed us yet, do subscribe and press the bell icon below so that you can have more videos from us. And thank you very much for watching us. Thank you, Essen, for being with us.
Thank you.